Great. Well, thanks. Another round of applause for all the sort of startups who contributed. I'm Michael Morisy. I'm the producer for Boston.com/Hive, which is a new sort of innovation focused section today. And I'm here to talk with Michael Norman, who actually I think is going to put out of business all the venture capitalists, because that seems like a very difficult process. Michael is a co-founder of WeFunder.com, which is a crowd investing site that we'll talk a little bit more about. And it lets, or will let sort of ordinary people sort of crowd invest in startups and companies, young companies. And we kind of wanted to talk about, because we've seen a lot of sort of interesting Kickstarter, Indiegogo have raised, at first tens of thousands of dollars. There was Twine based here in Boston that broke a record and raised $200,000, I think. And then a few days later, somebody raised $500,000. And sort of the growth of this area has just been really phenomenal. And I kind of wanted to talk about alternate funding routes and sort of where we're at now, what that means, sort of what WeFunder and Michael sort of sees this space going, and how that's sort of changing the sort of innovation landscape. So I guess, Michael, my first question is, are you going to put VCs and sort of traditional funding completely out of business?
So we think that we're going to dramatically disrupt the way that financing works for startups. I don't know if I would go as far as to say we're going to put VCs completely out of business. There's always going to be a place for investors that are really providing a lot of value to the companies that they invest in. And then VCs that do that now, that will continue to do that in the future, are always going to be able to get into great companies, and they can help those companies succeed. I think for the VCs and the angels that ultimately are not providing a lot of value beyond the capital that they're putting to work, that's the side of the market which is going to be completely disrupted. And entrepreneurs are going to have kind of more options of where they take funding from, and are going to be able to choose those investors which are really providing value apart from just money.
Great. Let's talk a little bit about background of WeFunder. So why aren't other sort of people allowing people to do micro investments and crowd investments in companies now? And sort of why are you interested in sort of starting a company that does that?
That's a great question. So WeFunder, we ourselves actually got involved in changing a piece of legislation which was part of the Jobs Act, which enables crowd investing, right? So I think what your question goes to is we've seen Kickstarter really be this phenomenon. They transacted $30 million worth of dollars in their first year in business, $100 million in their second year, and they're on pace to do over $300 million this year. So we see this drive of interest from the public in backing projects and getting things to see the light of day that start out as ideas. Now, what Kickstarter and Indiegogo are not allowed to do by law is transact securities. So you can donate to a project, to a movie, or you can buy a product, basically in a pre-sale type of interaction. What you're not allowed to do is invest in a company and receive a security in return. So you cannot make an investment and get shares of stock or hold some debt in return. That had been prevented by law from the vast majority of individuals doing. So what we were interested in changing ourselves, all the founders having been entrepreneurs who had raised money beforehand, is trying to figure out how is it that we can get the people that we know every day, our lead users, our friends that we really respect, how can we allow them to invest in our companies? Now, the way that the law is written right now, you're literally, in the vast majority of circumstances, not allowed to invest in a company unless you're wealthy. You need to have $1 million in assets, not including the value of your primary residence, or $200,000 a year in income. So for us, who had all started web companies, the vast majority of our early users that were really passionate about what we were doing did not meet the threshold necessary to be investors. But these were people that loved what we were doing. They were really passionate about the various projects that we were working on. And if they could really have, a stock certificate that hung over their desk at home saying that they were an investor in this company, you can just imagine how much more willing they would be to kind of help out with marketing or product feedback or recruiting when we needed to bring on new employees. So we had all felt this pain of restrictions from the law. And last year, the president mentioned crowdfunding in the State of the Union and sparked kind of a firestorm of legislative activity, getting a bill through the House of Representatives, sponsored by Patrick McHenry from North Carolina, very quickly. Right. And then we saw two bills on the Senate floor, followed very soon after, one sponsored by Senator Brown from Massachusetts, And those bills, particularly the other bill, had some real issues in it that would have made crowdfunding kind of dead on arrival had it been passed in its current iteration. So we jumped in really kind of to bring the startup community to the table and helping formulate this legislation and make sure it was written in the right way, such that entrepreneurs like ourselves could have access to more investors that would be really passionate about what we were doing and help in those early stages where investors can be so valuable. We sponsored a petition, got a ton of signatures, millions of dollars pledged from the community to invest in startups were legally allowed for their class of investor. That brought us down to DC, meeting with the senators and the congressmen and the White House, helping them rewrite the legislation in a way that could really work in actuality. And that all culminated with our being at the White House when the president signed it all into law as part of the Jobs Act and the Rose Garden on April 5th.
Great.
So that's kind of the backstory of how we got to where we are today.
Great. Well, I guess sort of now that you've kind of done all this work, how do you know this isn't a fad? I mean, isn't sort of Kickstarter and sort of WeFunder, I mean, aren't you like sort of overpaying for a product that might or might not come out someday, and that maybe it's like buying a birthday present for yourself 2 years in the future? I mean, aren't people going to wake up and realize, hey, I could just wait till it comes out and pay a retail price?
So I don't think so, right? I mean, you heard the numbers I mentioned beforehand, and we're really seeing Kickstarter climb this scale of really getting to be a large company and financing a whole lot of projects. And if we look at what's happening on Kickstarter, it's really fascinating, right? You have to think about what people are doing. What are you buying when you go onto Kickstarter? Are you just going to a store and buying a product that you are going to take home and kind of like you referenced, why would I pay for this in advance if there's some risk of it not being delivered? Or are you participating in an experience of really helping something be born, right? Where you're a part of that process, which is bringing something new into the world. And one of the things that we think when we look at Kickstarter, which has made them so successful, is that they've made that such a compelling experience. And the same thing is true of investing in startups, right? When you speak to angel investors, people that invest in early stage companies, it's as much about them being able to participate in bringing something that they care about into the world, helping some entrepreneurs that really compel them to make their vision into reality, as it is about a financial return. Now, obviously you definitely want to receive a financial return on the investment that you put into a company, but this is not like trading in the public stock market, right? There is an experiential component which is extremely fulfilling, which is independent of the financial returns.
Right. So you've talked a little bit about sort of what the investors get in it, but if I'm a company, I probably started a company because I hated my old bosses and I wanted to be my own boss. And now you're talking about giving these companies 100 crowdfunding bosses or 500 or 1,000 new bosses. What do the companies get out of it? Why don't they just go back to sort of the traditional investors who have experience, and instead you've got these unwashed masses who probably can't run their own lawnmower, let alone a business?
So I think that's a great question. And I think that we're going to see this kind of take two different levels. Oftentimes, as we heard earlier beforehand, you have an idea, you're an entrepreneur, you go to a VC, you're like, okay, I want some financing to get this off the ground, and they'll tell you, you're just too early, right? I like your idea, it's a very interesting concept, but there's a lot of unknowns and a lot of risk that we need to see taken out of the equation before we're going to feel comfortable, making a big bet on your company. And oftentimes, there are entrepreneurs that just don't have a track record of having launched a company and exited successfully beforehand, and they just need, a few $100,000 to get off the ground and really hit a few milestones that can then get them to the next point of financing. So we think crowd investing is going to be great for that, right? If there's a digital health company which is really solving a problem that you've experienced in your life with a loved one that had a certain medical issue, and you're like, okay, I know this is a very high risk bet, but I'm completely willing to put in $1,000 with the hope that this person is actually going to be able to hit that milestone and build this into a successful company that creates a solution for this problem that I have a personal relationship with. Same thing if you're an early user for a product that you love, right? Imagine being an early user of Facebook and saying, I know this is going to take off, right? Before any of the venture guys that looked at it or thought it was interesting, or even Kickstarter, right? Who a lot of the venture guys turned down. If you were a first user on that platform, you knew that was going to be successful. You had an insight as a user that gave you kind of that preferential information, which is going to, I think, be a huge source of capital for entrepreneurs. Now, on the entrepreneur side, you have to realize, I think, that even companies that don't have any need for capital, right? The best technology companies out there that are consumer facing, finding money is not a problem for those guys. But what they will want is to have, 500 small dollar investors who are their early users, who are out there, pounding the streets, helping them launch products through social media, Twitter, Facebook, sifting through their LinkedIn networks to find a quality employee when the company has a position open for hire, or A/B testing certain different designs as they're trying to figure out what makes the most sense. Being able to have that piece of ownership and sense of really being along for the ride with these entrepreneurs is going to incentivize individuals to do so much more to help the companies work, that as an entrepreneur, you're not just getting capital. You're really getting this army of evangelist investors that help you build the business.
Right. So I think you raise a lot of great points here, in that it's not just capital that people are investing in, and it's not just capital they get out of it. Do you think that sort of currently the crowdfunding industry is doing a good job of educating people what they get, and are those sort of concerns, increased? I mean, you look at the Facebook IPO, and there's so many dumb man on the street interviews where somebody said, "Oh, I'm investing my kid's entire college fund because I know it's going to be good." Like, is that even more magnified? Are these risks even more magnified with what you're doing?
I think they absolutely are magnified with what we're doing, and it's incumbent upon the platforms like ourselves to communicate very clearly the level of risk that you are getting into, right? Mm-hmm. That these are extremely risky bets, and they could have a large payout potential, but you could also lose it all. And so, we do a great job of communicating that ourselves on WeFunder. The other side of this is that the legislation actually has some thresholds in place that prevent you from investing beyond a certain amount, which the lawmakers have deemed, reasonable for you to lose.
Right.
So if you make less than $100,000, you're prevented. You can only invest the greater of $2,000 or 5% of your income. Mm-hmm. So we're not looking at people saying we're going to put the kids' education into early stage startups. It's $5,000 a year if you make around $100,000, then that steps up to 10% of your income if you make between $100,000 and $200,000.
Right. Great. Do we have time for a few questions, or? Yeah. Any questions about sort of crowd investing? Yeah. Sorry, I can't see you. The bright light halo behind your head, but.
Yeah. A question I had is, a lot of VCs are going to look at term sheets with hundreds of investors and kind of be scared to death of that, and maybe run away from those companies. Have you thought of what's a solution to that? I mean, I feel like a lot of entrepreneurs might feel the stigma of having crowdfunding and then not feel like they're able to raise another round because of that. What's the solution for that?
That's a great question. So you always hear this, worry about having a crowded cap table and what are VCs going to say. When you delve a little bit deeper to the surface of what they're really concerned about, it's all about what are the rights that those investors have on your cap table, right? So do they have control rights? Are you going to have to get 100 signatures from 100 investors when you try to sell your company, or you want to issue more options to the option pool? What we've done for our companies is actually put together a convertible note that gives investors that invest less than a certain amount of money effectively no control rights, so that they can kind of participate in the upside economically, but they do not have to have their permission asked when the company is going to take different actions. From the VCs that we've spoken to, that's going to be enough to mitigate the major concerns that they have about companies that will have taken crowdfunding. Bijan here from Spark, one of Todd's partners, wrote a great article about this back when the law was first passed, and said, look, there are things that we're going to have to figure out as an industry, but if a great company comes across our table and they have the growth and the traction that we like to see with companies that we invest in, and they've been crowdfunded, we're going to figure out a way to make it work.
Great. Well, I think we're just about out of time, but 3 minutes. Any more questions? It's hard. You all good? Well, thanks so much again for your time, Michael. Check out WeFunder.com if you haven't heard it for more information and to see all the sort of great sort of projects that are already gearing up. How many projects are you currently hosting now?
So we've had over 1,000 applications of businesses to raise money on the site. We're being pretty careful about who we allow to get in front of our audience. We'll have different stages where startups can kind of get posted once they've demonstrated a certain level of social proof from their own community and start to receive feedback and followers from investors. So even if you're not at the point where you're actually ready to raise funding, you can start to get the word out about what you're doing and allow investors to kind of say, okay, if I'm Todd, this is an interesting idea. Here are the milestones that I would need to see before I actually invest. And there are 29 of those companies that are up public right now, and then we've got 3 that are raising money. But that will expand dramatically once the legislation kind of rolls out into effect.
Great. So check that out at WeFunder.com. And also any sort of innovation news, we cover it at Boston.com/Hive. If you have any questions or your own stories to pitch, Hive@Boston.com. And thank you again all so much for participating, and have a great rest of the conference.